Most of that has been the Pima or extra long staple. Oliver Slope is with Blue Line Futures, and Oliver, no doubt China works its way into nearly every conversation, right?
Absolutely. It is certainly a topic of hot discussion here, not just over the last couple of weeks, but really since the start of the year. And you had mentioned the export data and really not being there for China and soybeans, which has, certainly been a headwind for the market. I would note that it's not like that demand just disappears. It's more of a displacement of demand. So that grain will find a home somewhere, whether it be China or somewhere else. But at these low prices, I think other countries do step in and start to maybe ramp up their purchases. Does it make up for the lack of Chinese buying is the big question right now. That is to be determined. Starting the week, though, we've got soybeans actually up a little bit. So that is encouraging, the fact that we weren't able to see follow-through selling pressure in beans. That's a silver lining. Hopefully we can start to see higher price action and encourage some momentum traders to jump on board. But really over the last several months, it's just been kind of wait and see what happens with regards to conversations and trade talks with China. And there's really just not a whole lot of new news to give traders a lot of conviction on either side of it.
Yeah, and then we look over at the corn market, and it's been lower 2 straight sessions. We're down 10% year to date. Is there any reason to be optimistic it could move higher?
We had been optimistic on the corn market, but last week's technical breakdown, specifically on Friday, break and close below the 50-day moving average. That came on the back of a failure against the 20 and 100-day moving averages resistance. So there is some technical damage here, a little bit of support at 410. If that gives way, there really isn't a whole lot of support until that psychologically and technically significant $4 level. So our optimism in corn has faded over the last couple sessions, mostly on technical chart developments. The fundamentals still have been pretty strong. Demand has been really stout, so that has been supportive. But again, technicals and momentum kind of taking the reins here over the last couple sessions in that corn market.
All right. We had let me make sure I've got this right. We had an outside reversal last week. Now, not talking about our grain markets now, but an outside reversal last week. What market did that happen in? Well, hang on and find out when we come back. This is Market Day Reporting. By surprise, hog market higher across the board. Oliver Slopes with Blue Line Futures. Oliver, the bull market continues.
The bull market continued last week in cattle, just a remarkable rally in live cattle and feeder cattle getting out above some big technical levels, which I think probably triggered some short covering from potential hedgers out there, as well as just kind of adding to the longs from momentum traders. You had mentioned the feeder cattle trading in a $5 range today. It sounds like a lot, but if you zoom out and look at the daily chart, it's really just a blip and still within the range of the 14-day average trading range, which is sitting at about $6.10 right now. So a little bit of weakness, a little bit of back and forth to start the week. It'll be interesting to see if this market can continue to rally like it did last week, or if we do get some sort of correction, which I think would ultimately be healthy and warranted for the market, especially in that live cattle market. We've started to see the cash market maybe start to show signs of stabilization, not necessarily a ramp higher or a breakdown lower, but I think consolidation could be the trend in the cash market, and potentially that sets us up for more of a trading range in live cattle for the next couple of weeks.
And then I guess finally here on the hogs, could we see a reversal, if you will, here in the hog market? Lower 4 straight sessions. We are ticking higher today. Is there anything to be optimistic about?
Yeah, we broke lower over the last 2 weeks, tested and broke below trendline support in the 100-day moving average on Friday, and now we're right back to it. So we're right back at a key inflection point for the market, about 84.5 to 85. If the bulls can kind of maintain price action above 85, I think that warrants additional relief towards the 50-day moving average at 86.5. Seasonally, this is a decent time for the market to find its footing, so I wouldn't be surprised to see a little bit more upside relief in the lean hog market to start the week. Whether or not it holds longer term, that's going to be the big question.
All right. Oliver Slope is with Blue Line Futures. You know,